Okay, welcome to the Chapter 9 Financial Statements for a Sole Proprietorship Presentation Lecture. Please make sure that you have the Chapter 9 notes along with the demo problems as we go through the Chapter 9 material. All right, reviewing of the accounting cycle. Step number 7 is going to be the financial statement section. Financial statements are prepared to summarize the changes resulting from business transactions that occurred during an accounting cycle or an accounting period. These are the statements that are normally given to the business owner to determine whether or not there's net income, changes in the owner's equity, as well as the balances of our permanent assets, liabilities, and owner's equity accounts in the balance sheet. Now, the three financial statements that you're going to learn how to construct is the income statement, which reports net income or net loss for the period. The statement of changes in owner's equity, which is going to summarize changes in the owner's capital account. And then also the balance sheet, which is going to report balances in all asset, liability, and owner's equity accounts. Let's first take a look at the income statement. Notice the heading. Roadrunner Delivery Service, which is the name of the business. Then income statement, the name of the financial statement that's being constructed. The date for month ended October 31st of the current year. On the left-hand side, we are going to list all of the accounts and type of accounts that are going to be analyzed in the income statement. We first are going to start off with the revenues. And in this case, we only have one revenue account, that's delivery revenue. On the right-hand side is going to be the totals of all of our accounts, our classifications of accounts. Because we only have the one revenue account, we are going to go ahead and just list that as a total, which is different in the expenses. Because in the expenses, we have multiple accounts, advertising expense, maintenance expense, rent expense, utilities expense. Therefore, the balances of those individual accounts are listed in the left-hand column, and then the total of the expenses is listed in the right-hand column. Also notice the ruling. A single rule here underneath all of the four expense account balances indicating a calculation follows. The total of the expense accounts, which is 1,500, followed by a single rule indicating a calculation will follow that number. And then finally, we have determined that we have a net income because our revenues are greater than our expenses, and our net income is 1,150, followed by a double rule indicating that no more calculations take place and that the income statement is complete. You'll practice this by doing problems 9.1, 9.2, and 9.3 in your problem packet. So problem 9.1, here's what we have. We have ticket revenue, we have ski rental revenue, and we have revenue from lessons. Because we have more than one revenue account, we are going to list the balances of each revenue account in the left-hand column, single rule, then calculate the total revenues and put that in the right-hand calculation column. Problem 9.2 then takes you through the next step, which is all of the expenses and the revenues. So for this problem, Prime Printing Company income statement for the month ended June 30th of the current year. We only have the one revenue account, printing revenue. We have all of the expenses listed here, followed by the total expenses, which are right here, $2,775.38. And totaling or indicating to us that we have a net income because our revenues are greater than our expenses. Single rule for indicating calculation taking place, double rule indicating all calculations have concluded. Problem 9.3. Let's say that we have a business or an example with a net loss. So now we have our revenues listed here on the right-hand side, only the one revenue account, so we know we can just put the total over there. The sum of all of our advertising expense, maintenance expense, miscellaneous expense, rent expense, utilities expense. And we can see by the numbers that our expenses are greater than our revenues. Therefore, we have a net loss. So single rule indicating calculation, double rule indicating calculations are complete. So net loss, expenses greater than revenues, net income, revenues greater than expenses. Statement of changes in owner's equity. Here's what this is going to look like. We will be doing this in problem 9.4. So you can work through this and use this as notes as you follow through, but it's going to be for Roadrunner Delivery Service, the name of the business, the name of the document, statement of changes in owner's equity, and then also the date for month ended October 31st of the current year. Because we have started from scratch, or the business started, its first month of operation is October, beginning capital balance October 1 is 0. So we indicate that with a slash through the right-hand column. Now, changes to the capital account are going to be investments that come by the owner. This is $25,400, which is the startup cash. And then after the first months of business of operation, the net income, which is $1,150. This is going to tell us then the total increase in capital, which is $26,550. Notice the ruling, single rule indicating calculation. And then the subtotal, which is going to be the sum of the total increases plus the beginning balance of the account at the beginning of the month. So because it was a zero balance, $26,550 is carried down. And then we subtract out of there any withdrawals that the owner took out of the business for personal use. So in this case, it's $500, meaning the ending capital is going to be $26,050. That is what we would carry over for the November statement when we constructed that one. Let's look at problem 9.4. So problem 9.4, we have Prime Printing Company, statement of changes in owner's equity for the month ended June 30th of the current year. What is the beginning capital on June 1st? We list that on the right-hand column, $8,714.21. Then we are going to add to that investments over the course of the month, plus net income indicated on the income statement. We will add that up. That will then show us the total increase in capital, which is $6,646.02. We then have to subtract out of that withdrawals taken out by the owner, which is $600, indicating an ending capital balance of $14,760.23. So this is an example of a company that had been already in operation the previous month. Therefore, we carried over the beginning capital from the previous month. The balance sheet. Balance sheet is going to tell us the balances of all of our permanent accounts. So we have our assets listed here, followed then by our total assets, which is listed in the right-hand column. Liabilities, here's our total liabilities, listed in the right-hand column and summed up here. And then also followed up by our owner's equity, which is the capital account number, which we had just calculated from the previous financial statement, the statement of changes in owner's equity. So our total assets is going to equal $37,775. We are then going to say that number has to equal our total liabilities plus our total owner's equity. So the sum of these two numbers equals $37,775. Therefore, our accounting equation, assets equals liabilities plus owner's equity. The balance sheet is a great financial statement to see the accounting equation in action. Let's take a look at problem 9.5. Okay, problem 9.5, after you have completed the balance sheet, this is what it should look like. So you have the totals of all of the assets, and you have that listed here. Prime Printing Company is the company, the document is the balance sheet, and the date June 30th of the current year. All of our assets listed here, balances of the accounts listed here, single rule, total assets here. And all of our liabilities. The liabilities listed here, balances of the accounts here, totaled up, total liabilities here. Owner's equity, Wayne K. Capital, taken from the statement of changes in owner's equity here. And then we finish up with our calculation, which is liabilities plus owner's equity equaling $19,084.47, which equals the total of assets, meaning assets equals liabilities plus owner's equity. The accounting equation proves. All right, so let's take a look at ratio analysis. Ratio analysis is the comparison of two amounts on the financial statement and the evaluation of the relationship between these amounts. There's also profitability ratios that accountants might also calculate. These are evaluations, the earnings performance of the business during the accounting period. These sometimes are necessary ratio percentage numbers that a business owner may or may not want to look at. So normally accountants will put it in there regardless of whether or not the owner wants to look at it or not. All right, so ratio analysis. Return on sales, we are going to examine the portion of each sales dollar that represents profit. So if we have net income to our portion of sales is $26.50. Net income is $11.50, so $11.50 divided by $26.50 is going to equal about 43.4%. That means that each dollar of sales is going to give us about 43.4 cents of profit per dollar. Liquidity ratios, this is going to measure the ability of the business to pay its current debts as they become due. We're going to take the current assets, divide that by the current liabilities, which is going to give us the current ratio. So now take 22,575 divided by 11,725, giving us a 1.92 or 1.9 ratio. A ratio of 2 to 1 or higher is considered favorable by creditors. Okay, so not quite there yet in this example. The quick ratio, taking cash and receivables divided by current liabilities, is the quick ratio. This is 1.92 also. 22, you see the math that's taking place in this situation. A ratio of 1 to 1 is considered adequate. Business can pay its current debts with cash. So 1.9 to 1 isn't quite where we want to be. We want to get closer to that 1 to 1. All right, we'll be doing a couple of examples on ratio analysis in class next time we meet. This then concludes the presentation lecture for Chapter 9. Please make sure that you review all slides as necessary and complete the notes and demo problems, and we will go over the results next time we meet.